morning. You're watching The Market right here on 89 with me, Asha Faridi, Nikunj Dalmia and Anisha Jain in the studios. And well, stepping into the Diwali week with a lot of festivities, India on the go, and one could say that about the market actually as well. So we've managed to snap our 2-week losing streak for sure. In fact, the biggest weekly gain that we've seen in about almost 7 weeks' time. So we're nicely holding roughly around that 19,300 print. At least that's what the Nifty implied open seems to be suggesting. And it's the heavyweights which are participating. So good signs.
So Asha, is the worst behind us and are we getting ready for a year-end hurrah? I think that's the narrative which we need to really focus on. That really could be not a local phenomenon, it could be a global phenomenon. So from a happy Diwali to a Merry Christmas, are we in for good days ahead? And the answer to that may well be yes. Now first you establish the market for the week gone by. We found support at critical levels, but more importantly, I think the macros are suddenly looking favorable, which is now let's first look at the macro and then we'll talk about the FNO trend. What are the macros? Yields have reversed, crude has plummeted, and the dollar index seems to be indicating that the bias for emerging markets is positive. So that's a big macro for you, and that is strong and supportive. Second, you look at the FNO trend. FI positioning in FNO is negative and a bout of short covering has kicked in. Nifty, Friday's trend, short covering. Bank Nifty, Friday's trend, short covering. So macros are positive, short covering has kicked in, and on balance, the earnings season has been good and above expectations. So the narrative of the market is that the geopolitical concerns are behind us, or markets have not reacted to that. Macros are looking favorable, and traders who were in a sense setting their trades for a breakdown trade, now they've been forced to recover. So this market in the month of October has followed a simple strategy. 1 step forward, 2 step back. I think now it's going to be 2 step forward, 1 step back. Or it may be 3 also, depending on next 3 couple of days. Actually, I'll not be surprised that going forward it could be 3 steps forward and 1 step back. I think we are in that kind of a year-end rally. You may call it Santa Claus rally, you may call it Happy Diwali rally, but I think a rally in global markets and Indian markets has started.
Yeah, and looking at the FI as well as the DI data, the fact that the DI buying year to date is almost double of what the FI selling has been. So that sort of rescued us. But a decent global handover as well?
Oh, well, yes, decent global handover, and at least that is something that we can, positively talk about, because there was a roaring rally when it comes to the US markets as well. As a result of that, it was one of the best weeks that the Dow, S&P as well as NASDAQ had in many, many months. In fact, for a couple of those indices, this is the best rally that we have seen in over a year. So very solid week coming in for global equity markets as well. In fact, in context, actually, Indian market pales a bit as an underperformer, because the NASDAQ managed to inch higher by 6.6% in the week gone by. The Dow Jones was up over 5%, but the Indian markets managed to eke out gains of just around 1%. So a bit of underperformance, but do remember, even when the rest of the global markets were falling in a tizzy, in fact, S&P and NASDAQ were in correction territory, Indian markets had held up okay. So there is a bit of, less catch up that Indian markets need to do. Having said that, on the net flow picture, there is still outflows that continue from India. If you look at the month-to-date picture, Taiwan saw an inflow of almost $700 million as compared to India, wherein there was an outflow of around $200 million. And Nikunj, that has been the case, right? In the month of October, we had seen outflows to the tune of around 29,000 odd crores. First 3 days of November, it's already over 3,000 crores. Do you expect when that Santa Claus rally comes back, these FIs will have a FOMO feeling?
See, markets always chase performance. And if India is coming back, which it is, I guess no one has a choice but to make a comeback. So while we may get into, you may look at the myopic picture in the month of October in terms of flows and think that, okay, our foreign institutional investors were net sellers, but my answer is so what? Markets are not completely dependent on global flows, and we've seen evidence of that. I'll not say anything new if I endorse that fact. But I think to Anisha's point, that are we in for a year-end rally, which right now is fueled by short covering, and then later on it could be FOMO and compulsion? I think we are there. And the reason why we are there is because of the pure positioning of risk in the world. And given that historically the year-end seasonality is always at play, Now, whether it would be a rally which would last till year end, or whether it could be in November, a few days in November, and then consolidation kicks in, that's a difficult one to call. But I think in the near term, when I say next couple of days, looking at the Nifty level, the positioning of risk, macro indicators, all of them are indicating that a bout of short covering has started. The compulsions of long positions will make a comeback, and I think we are in for a decent week per se. So there is no anxiety in the market. Let me put it this way: the anxiety in the month of October beginning was what happened in Middle East. October end, it was how bond yields were moving higher, how crude has started marching higher, how earning season was off to a slow start. All those concerns one by one are getting addressed, and the market is so confident, because if market was not that confident, then the IPO market would have not been alive and kicking. The IPO market is throbbing with action. Flows are coming there. So that is all indicating to the fact that the underlying interest of the market is very, very decent.
Oh,
And the fact that the CBOE VIX is now below the 15 mark, India VIX is below the 11 mark, a sharp fall from 21 versus what we had seen on CBOE VIX also tells you that there's no anxiety in the market, as you're putting it, right?
VIX is up, VIX is down, and Bitcoin is up.
Yeah, Bitcoin is also past 35,000.
So all you have to understand is which way markets want to relate with the risk. And I've always seen that assets which have done well for the beginning of the year, they tend to do well at the end of the year also. That's how, compulsions, they move. Year end, everybody wants a bonus, everybody wants to take care of the NAV. So I think purely looking at history, until and unless something comes out which could be a binary event, which I don't know today, looking at the indicators, risk, positioning of the market, flows, macros, and where the positioning of FI and the FNO is. Bear in mind the FI positioning, beginning of November was at a record short.
Yeah.
Flows have been completely against us. So all those factors have to kick in.
And nothing will change in the next 1 month because you'll have those year-end compulsions too.
Yeah, so you have two options. Either you can wait for the correction or you can participate. I think it's time where you should not wait for a correction. You may call it FOMO, but in my school I used to use something called sour grapes, Lomdi ki story. So that is something which everybody will be saying if you don't participate.
But one event to watch out for in November is the elections, right? The state elections in 3 or 5, how many states there is state elections? So I think that is something that might skew
3 big ones.
the numbers.
3 big ones.
Yeah.
Yeah, 3 that matter.
Yeah.
Yeah. Okay, but this week it's not a truncated one, even though it's the run up to Diwali. In fact, Sunday we'll have the Muhurat trading as well. So it's an elongated week, if you will. But yeah, to the point that Nikunj was making about the primary market, that surely is lively. You've got 2 listings from Seller World as well as Honasa. And just looking at the subscription figures tells you about the underlying appetite in the market, because Honasa on a total basis was subscribed about 3.6 times in any case. It's the last week of major earnings as well. While of course we're going to discuss SBI's numbers which came by over the weekend. But the important ones I think are going to be M&M and maybe Adani Ports as well, and the commentary thereof. So that's going to be important. Besides that, of course, you have a whole host of other mid and small caps which are also due to declare their numbers. And 3 IPOs or rather 2 IPOs open as well this week. So clearly the primary market action is extremely robust.
Honasa or Mamaearth was always expensive, so I'm not surprised with what the IPO subscription was and whether the listing would be. So this is for one of those class of investors who say, okay, I want to take a risk and I'm going to take a slightly contra view. I'm happy to take risk and volatility, and I am happy to bet on a small brand becoming big. Now that comes with underlying risk, but the return could be high, because if Mamaearth is able to become a brand, if they are able to bring the costs down, if they are able to cut the advertising expenses, they can surely they've created a brand, let's be very clear. All I'm saying is that on an absolute basis and on a relative basis, if you are an equity investor, there are better options. But if you are one of those who says, okay, I don't mind chancing my arm, have some risk capital where I'm okay to take a 20-30% volatility, then it does have some option value because of the brand they've created. Cello, standard, good company, decent growth, reasonable valuations. I think you will be in for some listing pop. But these IPOs, none of the IPOs in a sense, at least this week or last week, was so exciting that you can say that, okay, you got to wait for them with your with the bated breath. I don't think anywhere in terms of the companies which are going public are that interesting, or companies which are going, interesting companies which are going public are cheap.
Okay. In the meantime, you can already feel the election pulse getting stronger. On Friday evening, the central government's free ration scheme that aids about 80 crore poor will be extended now for 5 more years. In fact, Prime Minister Narendra Modi announced the decision to extend the Pradhan Mantri Garib Kalyan Ann Yojana while addressing a rally in Polban, Chhattisgarh. The program was introduced, remember, during the COVID pandemic in 2020 to offer relief to people hit hard by the lockdowns and stalling of economic activities. Every month, the government supplied 5 kg of food grain free of cost to individuals. In fact, let's hear out that announcement too.
मेरे गरीब भाइयों बहनों, मैं देश के गरीब भाइयों बहनों को आज दूर की धरती से बताना चाहता हूं, मैंने निश्चय कर लिया है, देश के 80 करोड़ गरीबों को मुफ्त राशन देने वाली योजना को भाजपा सरकार अब अगले 5 साल के लिए और बढ़ाएगी.
Okay, so that was the latest commentary coming in from Prime Minister Narendra Modi on the free ration scheme. But what about the markets and that big uptick that we are seeing in the gap up opening above the 19,400 mark? Where do we go from there? Let's discuss that with Sotni Patnaik, the Assistant Vice President, Equity Broking Group from JM Financial, and Kunal Bothra, as always, is back with us. Kunal, seems like when you were on the holiday, the bulls made a bit of a comeback. We're above 19,200 already, but once we do start above 19,400, where do we go from there?
Good morning, Anisha. So I think it's a good comeback for the indices. Last 4 or 5 days, we've managed to recover some 300, 350 odd points on the Nifty so far. And hopefully with today's gap up opening, we could probably be adding another 150 plus points on the index. Now, there are a lot of positive takeaways as such for the indices. Of course, what started off from the global markets with Dow Jones recovering more than 1,500 to 2,000 points from 30 to 500 levels, coming back about 200 a moving average. The Nifty ending its correction on the expiry day. And we've seen this phenomena over the last many months that a 3-month correction generally tends to end closer to the expiry. You know, even in December 2022, we made a top on the indices. We took 4 months for the indices to get into a correction or a drag as such. And March 2022 is where 23 is where we bottomed out and we started a strong rally. So far, you know, we've seen similar kind of a pattern where the index has ended the correction on the expiry day for the previous series, for the previous expiry. So I think that's also an indication that we may probably have ended a major phase of correction. Bank Nifty back about 200 moving averages. So a lot of positive data points to take away, expecting this move to just get a lot more stronger than what we've seen over the last couple of days.
Okay. Soni, what's the sector that you're betting on or group of stocks which you think will lead the market higher?
Right. So, good morning and thank you so much for having me on the show. I think, sectors that we can still bet on would be realty, and PSU banks seem to have taken a very good support. Stocks like Bank of Baroda, PNB, they individually stocks, if you look at supports, have been quite well placed, and they're trying to give that short covering. You know, Bank Nifty may likely lead this short covering rally for Nifty as well. So I think these are the good place to, good sectors to place bets on. Also, I think mid-cap IT is looking quite well placed, even with choppy markets. Mid-cap IT was something that was still outperforming stocks such as Persistent and Cofor. So I think these 3 sectors would be quite a good, as a good placed support, and you can definitely place your bets with these 3 sectors.
Stocks as well. Kunal, what's on your list?
So I'll go with a few mid-cap names. The first one is about Godrej Properties. Real estate index has been doing exceptionally well over the last 7 to 8 trading sessions. So Godrej Properties is something which I would be bullish on from current levels, expecting a breakout to sustain. Targets of 1850 for the stock over the near term, stop us at 1750. And second would be from the PSU banking lot. I think PNB is something which looks fairly attractive, trading at closer to 74 odd levels. Would be bullish on the stock, expecting a target of 82, stop us at 70.
Soni, what about you? What are your individual recommendations?
Right. So even I had Godrej Properties. Right now, I think I would just change it a bit. So first, I'll go with Coal India. I feel that Coal India has been consolidating quite strongly, even when the markets were falling. It has a very strong base of 305 to 300. So keeping that as a stop loss, you can buy at current levels, and you can have targets of 325 to 330. So it's quite at an attractive consolidation space. The second pick would be from the metal sector, which can be an outperformer from its other peers. That is JSW Steel. I think JSW Steel is showing you a good bounce back from current levels with good stop loss of 730. You can have targets of 770 to 775.
Okay, those are some stock ideas coming your way, but here's the Big ET Now exclusive, none other than Chris Wood. And you can hear that entire conversation at 9:20, but here's a slice of what he's betting big on, both in the medium as well as the long term.
So in less than 6 months, people should look to buy gold and Bitcoin for the very simple reason I would expect adjustments. And based on my view, the monetary tightening impact is going to kick in on the next 2 quarters. You should buy gold and Bitcoin because it will respond to any change in Fed policy. But if you're a millennial, you won't want to buy gold, so you should buy Bitcoin because there's a halving of Bitcoin. Can Indian people trade Bitcoin?
You can buy Bitcoin.
Yeah, so basically the halving of Bitcoin's coming up next year.
Yes.
And I believe it's not a precise timetable, about April, May.
The volatility will come down.
But all the precedent is you make money if you buy ahead of the halving.
Okay.
So in the 3 to 6 month period, I would say, yeah, gold mining stocks and Bitcoin. And then on the
1, 2, 3.
On the other 2 environments, I'd buy Indian equities.
So for the medium term, which is 1 year plus, and for the really long term, which is 5 year plus, you would buy Indian stocks.
Yes.
Okay. And would you be again advocating that anybody who's got a long term time horizon, which is 5 year plus, the focus should be, according to your portfolio, real estate? It should be largely capex driven, and it should be financials. 3 sectors should.
But that can change.
But as of now, that's your view.
As of now, that's my view. But my key point is, yes, any correction from external sources in India should be bought.
Okay, let's talk about specific stocks which will be in focus on account of news flow. And Zomato was one stock which is already up almost 10% on Friday post its results, because there was a positive surprise when Blinkit turned contribution positive, plus the overall bottom line looked healthier than expectation. But now it seems, Somit, that even brokerages are giving a thumbs up, and it could be another day of solid gains for Zomato today.
Well, that could be because most of the brokerages that have come out with their note have at least upgraded the target price for Zomato by around, on an average, 30 to 40 rupees. Now, what Jeffries is here saying that they're firstly the fact that Blinkit has turned positive is something that the street was not expecting. So that is one thing positive. Now they're saying that going forward, management has the ability to prioritize over growth and margin, and this call would be taken by the management on quarter to quarter basis. Now, quick commerce remains impressive as per Jeffries. CLS has in fact upgraded that rating on Zomato to buy from an outperform, and have hiked the target price to 168 rupees from 120 that was there earlier. Now they're seeing that there is greater confidence when it comes to profitability of Zomato going forward, especially given the fact that Blinkit is now turning positive. And they're also saying that the users of Zomato have been the frequency of using Zomato has in fact increased among users of Zomato. Now JPM has come out with this interesting note where they're saying that Zomato should mature into a triple engine profit machine over FY24 to FY26. They're saying that the food delivery business has transformed to cash cow business. Blinkit is now turning profitable, making it the fastest growing Indian internet firm. And they're also saying that Zomato will be the most profitable global food tech company going going forward. Now they're seeing the EBITDA to grow nearly 40% over FY24 to 26, and they have actually upgraded the target price by nearly 50%. From 100, they have increased the target price to now 150. Similarly, Goldman Sachs has also increased the target price by around 30 odd rupees. Earlier it was 100 to 130. So overall, all brokerages have remained positive. So we can see some kind of an up move when it comes to Zomato, right?
See, guys, I mean, this in my book would be a classic case of disbelief and then a classic case of turnaround. Beginning of the year, everyone thought that, okay, you know, this is one company or this is one sector which will just not turn around. And it's a turnaround which is remarkable. Food delivery business had shown signs of turnaround 2 quarters ago, but what is important here is the grocery business, which is a thin margin and it's a thin margin business. They managed to turn it around. Now, for me, the minute you say Zomato, well, the first impression is food delivery. But I think it's the Blinkit business which really needs to be, which really needs to be bought out, at least for the quarter gone by, because the total addressable market, which is called as TAM, the total addressable market for the grocery business is 10 times more than the food business. If they are able to really scale it up in that category, I think we could be looking at potentially a very different kind of a, very different kind of a setup for Zomato. The challenge is that for Zomato now everyone is on the same side of the boat. At the beginning of the year, everybody was bearish. Now everyone is bullish. Zomato's market cap is now almost 1 lakh crore. So on 1 lakh crore for Zomato now, the stock now to keep on going higher, the delivery has to be above estimates. See, for 3 quarters in a row, Sumit, they have surprised and they have delighted everybody. Can they continue this upward march? The trajectory is headed there. But given the run-up in the stock right now and given that, you know, how everyone's turned bullish, could there be a case where just the pure price may start consolidating? Because the stock is up almost 100%. So my only, gray line is that the run-up in the stock and the current market cap right now, I think the run-up has been too fast and the market cap is 1 lakh crore. But in terms of a turnaround company of the year, I think the crown clearly in my book goes to Zomato.
Okay, the other one, of course, is going to be Interglobe Aviation as well. That too came out with its numbers. And Samit, I can see that they're looking to up capacity 2%. That's the guidance that they've given on a sequential basis. But how are the numbers stacking up?
Well, on the face of it, if you see the numbers, they will look much ahead of what the street was expecting, given the fact that the street was expecting there to be a loss, but the company has reported a profit. But there are a couple of one-offs, and the street believes that if you strip off those one-offs from the Indigo's number, then it would have been a loss. So first one-off is related to some airport charges. There was some provision reversal done by the company because of the airport charges, in fact, has come down on a sequential basis. Also, the supplementary rentals or the aircraft rentals for the company were on the lower side because there were some claims that they had booked as in the expenses that they had received from OEMs. Now, when asked on the call, the company did not give the full amount, but street continues to believe that if you remove this one-offs, the company that Indigo would have reported a loss in the second quarter as well. As far as capacity guidance goes for the third quarter of FY24, that is the ongoing quarter, they're expecting their capacity to increase by around 2%. But the numbers were not that great on the street, and given the conference call takeaways, if you see, currently they have grounded nearly 40 aircraft. Now, do remember when the engine issues were out on media reports, the company did not expect this to be a big impact, but now there are nearly 40 aircraft that are grounded, and they're expecting more aircraft could get grounded going forward. On the yield side also, they are saying that so far yields have declined in a single digit, in high single digit. This could be around 9% odd decline that they're seeing on the yield side, and that is on a festive season. They're expecting some recovery to happen in the month of November and December, but what the street is believing is that at best yields could be largely flat on a YY basis. So we are not expecting any improvement when it comes to yield, which measure the average ticket prices. And on the cost side also, there could be higher costs going forward, given the fact that now they have to lease more plane from the secondary market, which are coming at a higher cost for Indigo.
You've summarized it very neatly, but my limited point is that can markets really look through 2 quarters? Because post 2 quarters, Sumit, the capacity will kick in. Post 2 quarters, a lot of engine issues will start kicking in. Post 2 quarters, you could actually get a clear visibility in terms of where the seat and the capacity addition is headed. Also, I may also like to point out that crude prices have suddenly collapsed. 96 has become 86, and this is the peak season for them. This is a time when yields are actually to move higher. While the uptick in yield because of the decline in capacity addition in a sense will get nullified. But my sense is that, if you're a long haul guy, you can just say, okay, the near term capacity constraint is not something which is a fault of the company. It is purely because of some external issue. And if you say, okay, I'm ready to look beyond 2 quarters, I'm ready to ignore the fact that yes, one of the promoter is selling, and that overhang will be there. But if you say I'm taking a 2-year view, 3-year view, can this be part of everyone's portfolio? The answer to that may be yes. I mean, the similarity between Indigo and on Zomato, I see is that they both are in oligopoly businesses. There are 2 food delivery companies in India, Swiggy and Zomato, and there are going to be 2 major airlines in India, which is going to be, Air India and Indigo, because Go Air is down, Spice will not become big, and Akasa is still taking its baby steps. So next 2-3 years, once the capacity kicks in, I think Indigo could be in for not just, strong wicket, but also some cruise landing.
Okay, flying high. That's the verdict on Indigo, blue sky territory, and it's all the way blue because the men in blue also managed to continue their dominating, series in World Cup. We had another win coming in, and this is the unparalleled 8-win streak after beating South Africa and Kolkata last evening. The man of the moment, of course, yesterday was Virat Kohli, who knocked a solid century on his 35th birthday and leveled the ODI centuries record of the legend Sachin Tendulkar. A 5-wicket haul coming in from Jadeja ensured an early pack-up for the South African team. India is now placed comfortably on top of the points table with a net run rate of 2.4. We will now face the Netherlands on 12th of November.
Back with the market right here in 80 now, coming out of a comfortable week actually, and this morning too you're starting off on a decent set of global cues. So just looking at the Nifty implied open, it seems like we're going to almost hit that 19,300 print. Sanjeev Bhasin too joins in on the show, and Sanjeev, looking at the global construct morning firstly, seems like we're headed in for a happy Diwali after all.
Yeah, good morning, Aisha. Well, that's what I have been saying, that we are headed for a sparkling Diwali. The cricketers have actually added, the sparkle, and now it's the turn of the stock market. If you recollect from the last 6 months, I've been telling you, inviting you for a meal over to my son's restaurant, and I was telling you what margin Zomato is making. So at 50-60, it was a no-brainer, and now you're seeing the upgrades. So cheers to Zomato earnings, cheers to the Indian stock market. Indian cricket team, and from today I would expect a sparkling Diwali to be added, the icing on the cake.
Okay, point taken. So that's the latest on the stock markets, and definitely in for a glittering Diwali. But Mr. Bhasin, would you concur with that view on SBI as well? It was a decent quarter that they reported. Asset quality is improving. They're talking about a 13 to 14% credit growth rate, but there seems to be some worry around the operating costs and the high employee costs. Your take?
Yeah, good morning, Anisha. If you see the results all over, there has been a slight dip in net interest margins from the large private banks to the PSU banks, which was evident that the cost of money has gone up because of yields. You cannot have the cost of money remain the same even if your liability franchise is working well. I think that is part and course. If the Fed is done with rate hikes and the yields are set it lower, Indian inflation has been rather moderate. I would expect that even if this NIM margin remains like that, credit growth and the book overall is looking very good. Most people will take that the fall in provisioning is added to the color. It's not that. Provisioning is actually coming lower to the lowest level in 18 quarters, which is telling you that recoveries are very sharp. I was in Amritsar over the weekend, and I met a couple of bankers from State Bank. They said the prerogative from the top management is only recoveries. We are not supposed to sit in office, only recoveries. I cannot tell you how fast this whole game plan of recoveries is moving. And kudos to the managements of all the PSUs who are stressing the need for that. So I would definitely use any decline or even yesterday's closing as a buying opportunity in State Bank. I think Bank Nifty is grossly overdone on the pessimism side. That will be the star in the next 1 month.
You briefly highlighted Zomato, Sanjeev. Let's look a little bit further. Is it a good time to buy Zomato even now after that run-up that the stock already saw on Friday, and I'm sure it's going to see a follow-through today too?
Yeah, Aisha, that's a difficult question. At 60 rupees, we have and we own Zomato in a lot of quantity. At one, that new highs, it will be difficult to stay out, but the market is showing you momentum. I would still say add a little of it. And if you want a color in the similar space of QSR, please add Devyani International. That would be one of my Diwali picks. I think arguably Costa Coffee, Pizza Hut and Kentucky are doing extremely well, and Costa Coffee is biting into the market share of Starbucks. So I would really say buy some of Zomato, but please add Devyani International. That can be a dark horse.
Devyani International is one of those Diwali bets coming in. But Kunal, HDFC Bank, after many months, I think this was one of the best weeks that we have seen for HDFC Bank. It was up just 1%, but still, I think it's the best week it's had in 2 months. Would you call this a breakout or anything at all?
No, I think it's nowhere close to a breakout. But yeah, I think it's a good sign that at least the stock has stopped falling or being at the brunt of some sharp selling pressure. Now, I think this is the concern for the markets at almost 40-45% of the weightage of the Nifty 50, the likes of HDFC Bank, Reliance Industries, ITC, TCS, Infosys, etc. These stocks are struggling around their 200 moving averages or below them by a margin of 5-7%. The case for HDFC Bank and Kotak Bank, specifically these stocks are trading below their long-term averages. So I think that's the bigger concern for the markets, that these larger cap heavyweight names are the ones which are struggling or acting as a drag for the indices. Now, for the index to have a free-flowing move on the upside, you need at least 2 out of these 5-6 names to start participating on the upside. As of now, the selling pressure is stalled in HDFC Bank, but then that doesn't mean that the stocks would start to get into a V-shaped recovery. We need to see first signs of breakout for HDFC Bank, for example, 1520. Is the first level of a strong breakout for HDFC Bank, and then followed by that, we could probably be expecting the 200 DMA, which is around 1550 odd mark for HDFC Bank. So these are the 2 levels which I'll be keeping an eye on.
Okay, well, on a year-to-date basis, the stock has fallen about 9%. Let's just bring up the last 1 week and then last 1 month chart as well, because that's the recovery that we're talking about, which Kunal as well highlighted. If we can just have that stock price for you on your screens maybe later. But here's what Chris Wood had to say about HDFC Bank.
I've got a selection, but clearly this particular bank is at a much big. There's been a significant derating relative to history, right?
Yes.
So I think, but in a couple of the major Indian private banks, we have succession issues. So that's always going to create. There's always going to create some near-term issues, but then you have the technicalities of the terms of the merger. But fundamentally, if global money does come into India, let's say, when I say global, non-dedicated emerging market money, I think the first sector global money will invest in India is the major Indian private sector banks, because they are the domestic demand proxies.
Okay, so that's about HDFC Bank, but let's talk about some of the earnings. AFL India is something that we want to talk about, and we have the management joining us. Anuj Khanna Soham, the founder, MD and CEO of AFL, joining us on the show. Hi, I just wanted to begin by discussing your international business, because that managed to grow almost 10% sequentially, despite the kind of headwinds we have seen globally. What led to this outperformance, and do you believe that international business could continue growing in double digits?
Well, first of all, thank you for having me on your show. And, I would like to say that the way to look at Apple's business is that we are deeply anchored on global emerging markets. Anchored out of India, and global emerging markets together contributes about 75% of our business. And in this emerging market space, our company has grown year on year 20%, even in this quarter. So I know the numbers don't, when you see it as India versus international, it's one way of looking at it. But when you see what is the growth in global emerging markets, and that's 75% of our business, that's not just double digits, it's over 20%, even in this quarter. And that shows that the emerging market space is resilient. And even though there have been certain verticals which have had some impact, for example, in India, due to GST changes in the gaming segment, there was some impact in the last quarter, which was not insignificant. Even with that kind of a headwind, we were able to deliver 20% for at least 75% of our business. Then for developed markets, let's say US, Europe, and so on, I think fintech is one category which is definitely seeing headwinds. But because we are much stronger now in a broad-based set of verticals in developed markets as well, we are seeing a nice sequential pattern of growth.
I'm just wondering, Anuj, that your CPCU advertising model, how much is that going to garner in terms of incremental revenues then?
So the CPCU business is a very unique proposition, going to the advertisers and telling them that you can work with Apple's platforms on mobile connected devices throughout the consumer's journey, right from when the users open their mobile devices to using apps on mobile devices to how their mobile devices connect to connected TV and so on, the entire journey of a consumer's life cycle. And that's for new user conversions, repeat user conversions, and online to offline conversions. And this is today over 93, almost 93% of our total revenues. The CPCU business is being very, very resilient. And I would expect the advertisers to continue to spend because digital is a multi-year long, many multi-year growth trend, right? I mean, the consumers are on digital devices and the advertisers are still calibrating up to catch up with that. So we expect more than 50% of the ad spends in emerging markets to go to digital in the next few years. So there should be, positive growth in CPCU.
Growth in CPCU, but I want to understand from you, how is pricing also turning out for you? Because margins this time expanded to 20%. Is there more northward bias to margins then?
So I think what we're seeing is a consistent, as we are integrating all the acquired assets into the company over the last 3 years, I would say all the acquired assets of the past have been more or less fully integrated into the core platform and are now performing well. And therefore, even after the most recent acquisition of UAP, we are seeing over 20% EBITDA margin in this quarter, where UAP is full 3 months is integrated. And we are seeing a good and healthy margin expansion. Even in the CPCU pricing, if you would see, we are constantly notching it upwards, creating a better pricing potential for the company.
Lastly, before I let you go, a word on the acquisitions. You talked about how the earlier ones are scaling up, but that leaves you with the headroom to probably acquire more?
Well, I think at the moment, the focus is on, our 4-year to, the rest of the decade growth plan. And we have a very robust initiative on, our products, patents, platform, partnerships, people, productivity, and profitability. And all of these initiatives are well anchored. I would say that, you should, continue to expect profitable, sensible growth of our company going forward, organically as well as inorganically, but we will be carefully calibrating for that.
Really appreciate your time and glad you could join us. Good luck for coming quarters. Markets, we are in for a big start, highest for this Nifty. And the FNO positioning, let's look at it. My producer will just fire it. What happened last week? Well, Nasdaq made the comeback, Bitcoin made the comeback, and Indian market stabilized. Now, yeah, we had fallen less. So in bounce also, we will also come back less. But short covering in Nifty, short covering in the Bank Nifty. Kunal, are we reaching that stage where the bears could be running with tail between their legs? Tum daba ke bhagenge. Are we reaching there?
Yeah, Nikunj, I think the bears seems to have definitely been trapped at that 18,800 mark where we made a low for the index last week. So, as I was picking a point that we've seen the corrections, even in the historical context over the last, 4-5 months, in the month of March end, March 2023, we ended a 4-month of correction. The correction ended on the expiry day, and from there, what we started off initially was a round of short covering, but then that resulted into a strong bout of rally for the index and a trend for the index from that 18,000 odd mark. I think we could probably be expecting a very similar kind of a trend this time around for the index, where we've managed to end the correction on the expiry day, 4th consecutive month in terms of the expiry from July highs of 90,800 odd for the index. I think from there on, we've ended that 4-month of correction, and I think this could now be a start of a very strong uptrend. So I would be pretty much of a belief that this could be a start of a very strong uptrend, not just a short-term covering rally.
Sanjeev, I want to go back to some of the real patronized stocks by traders. One is Vodafone, which we've discussed. Second is TTML, and third is Suzlon. Are the decks looking clear for all three?
Well, we own Vodafone and TTML, and we think they are really going to be outperformers. Now, you will keep doubting the fundamentals, but there is a sea change which is on at both those counters. And as a disclosure, those are two of those stocks which are in our portfolio, our coverage. So we have an interest in that. And we think that, the best of times is just starting. So both those stocks are a buy. You could add now, you can look for declines, but you must have those in your portfolio. This is the high beta side of the portfolio. And like we said, we think the market is headed to 19,700, 19,900 by this Diwali. And way forward, new highs are very much on the cards by the end of this month.
New highs, a new high on the cards. Well, happy Diwali to Merry Christmas. Year end, we've historically seen that markets, there is cyclicality which always has been at play, and which is the point I'm making from Thursday, Friday, that are we getting ready for a last hurrah before the year ends? Given where yields are, given what we've heard from the Fed, earnings season is behind us. Do we have a line in sight now till year end? Well, looking at the macro setup, the flows, cyclicality, seasonality, valuations, I think I will not be surprised that large cap stocks just have a last hurrah before we say goodbye to 2023. Kunal, would you stick your neck out and say that? I'm doing that.
Yeah, I would definitely do that. And again, I think Nikunj, the point where many of these large caps are, they've completed a major mean reversion for themselves. Reliance Industries back to its 200 DMA, ITC back closer to its 200 moving average, TCS Infosys also very similar kind of a price range for themselves. So I think we are at a point where many of these large cap stocks are at an ending phase of a correction. Now it could be, what could be a trigger point or a catalyst for these stocks to start getting into a rally mode. That's something to watch out for. But I would definitely be of the belief that these stocks have come back towards a major risk reward point at current levels. So from a medium term, long term play, I think buying these stocks at current levels could be just about a fantastic risk reward.
Okay, point taken. But it was not just SBI, Zomato, Indigo that reported numbers. There were other fintech companies as well. Not fintech, to be honest, the new age platform companies, Delivery as well as PB Fintech. And it wasn't that great a set that we saw from both the companies. Delivery, the losses actually came in at 102 crores, even though the revenue expanded by 8% on a year-on-year basis. And for PB Fintech as well, there seems to be loss, which is actually expanded. So, of course, commentary will be important from both of them, but the numbers don't look that impressive. Sony, if you have enough chart history to talk to us about these two counters, Delivery as well as PB Fintech.
Right. So if we talk about Delivery, recently we've seen that it has performed well. However, if we talk about from the current levels for a very short-term perspective, looking at, it's been trying to hold a very important support of 390. I feel that as long as it is holding up and above of 390, it can show some more, consolidation before it gives you a real breakout above 740, which is, to be honest, a bit more space from current levels. So we'll have to just wait for those levels. I think that's how it would be better. And talking about PB Fintech, it's looking decent, I would say, at the current levels, not exactly the very attractive levels to enter right now. We'll have to wait and watch how the result impacts for today to enter any fresh trades for the PB Fintech.
Now, it's interesting. I want to go back to those numbers once again, because look at the narrative now. Zomato has reported a profit. Delivery has reported a loss, and PB Fintech, even though they've guided for a 1,000 crore profit in FY27, for the quarter gone by, you would say that there was some cyclicality which was at favor. So if I have to really talk about a company which has surprised, well, it's clearly Zomato, hands down. Then I would say it would be PB Fintech, because operationally things are looking for them. I guess Delivery has not really lived up to what the promise was. And Sanjeev, that I think is a very fair statement, that Delivery has not kept the delivery going.
Correct. Nikunj, as a disclosure, we also own PB Fintech, and that's our top recommendation. I think Policy Bazaar, the franchise, the technology, the management's commentary, they are talking of very, very bullish circumstances and times over the next 3 years. Insurance is at the tip of the iceberg. I think PB Fintech is a must-have, and quarterly numbers in the next 2 quarters will show a lot of difference. So my bet would be PB Fintech. Like I said, as a disclosure, that is also one of the fintech stocks which we own. We think that Paytm and Zomato are going to lead the charts. You can add a Devyani International, which we just suggested, but I would put my money on PB Fintech, at least for a 50% upside over the next 1 year.
Did very well. I think on Friday was Dr. Lal Path Lab. Now, Diagnostic stocks, they went to P multiple of 70, 80, 90 times at peak of COVID. Obviously, because of COVID, India was testing, and along with just an RT-PCR, it was called RT-PCR, right?
Yeah.
Yes, RT-PCR. Yeah, see how we've forgotten what happens. RT-PCR testing, there were other allied tests which were done, and then some of the companies actually had a huge bump up in their earnings. Then came the point of realization, and then numbers, they started dropping, P multiples, they started contracting. But now stability has come back. The so-called adventurous new players in the entire diagnostic space, they've realized that they need to focus on profit, and the existing players have added much more capacity. So these are businesses which are likely to grow not at 40-50% what they were growing at COVID. These are businesses which will grow in 12 to 15%, which is what the historical average is. But the stock did well post numbers. Sanjeev, is it worth revisiting the diagnostic space? Everybody bought diagnostic stocks because of what was happening during COVID. Then these stocks went through cash landing as the COVID profit waned away, and now it's back to reality.
Correct. And in Delhi, you have the AQI, which is actually unfortunately adding to woes for people. But I would still go with Apollo Hospital. That has been one of our top pick. Their Apollo Pharmacy, their diagnostic business is expanding very fast, which has actually been a hurter on the earnings. But if you see the presence and the geographical bent of how they are expanding, Nikunj, you will be amazed. Apollo Hospital makes 58,000 per bed per day for a user, and I think they are growing much faster than we thought. Insurance is a very big added supplement to that. So if you had to pay this place, Apollo Hospital is my top pick. Seasonality will play out for the likes of Dr. Lal PathLab, but as a business, it has a very good future. Only the competition will bite in. So if you wanted to buy some part of it, Apollo fits the bill perfectly.
Just hold that thought, Mr. Bhasin. We'll come back to you with more questions. But in the meantime, let me go across to Vinny to get a sense as to what the verdict is as far as Titan numbers are concerned. Vinny?
So obviously it was a glittering set of numbers that came in on Friday. We saw the stock also see a bit of an up move. Now brokerages came in as well. The con call in terms of commentary on that front also was a decent commentary that came in there. Whether you look at it, the brokerages are maintaining a buy. They've given a target price of 3,900 rupees per share. That is HSBC. Now they said that strong Q2 reinforces Titan's structural appeal. They believe that EBITDA margin in the jewelry segment was quite impressive for them. That beat their expectations as well. And scaling up in the international business is something that they are watching out for, especially because it's on track and further expansion is coming in on that front. Other divisions also have seen a very strong growth, double-digit growth as well. And overall, that is why they're retaining a buy on Titan. Other than that, CLSA actually is upgrading the stock to a buy from a previous outperform rating. They've hiked the target price to 3,948 rupees per share from previous target price of 3,540 rupees per share. So yes, brokerage is surely giving Titan a thumbs up post a decent and a good set of numbers that actually came in from the company, especially in terms of acceleration of expansion into new large markets is something that CLSE is keeping a close eye on for Titan as well.
Point taken. Thanks so much, Vinny, for joining us with that quick update. But Kunal, I wanted your word regarding JK Cement as well as Aarti Industries. If you go by what the companies have delivered in terms of numbers, plus the brokerage view coming in from Morgan Stanley and Aarti Industries, looks like they'll have a great opening. After that, what should one do?
But the stock has been a struggler as such over the last 1 year. I think, if I'm not wrong, 2022 high for Aarti Industries was around 900. The stock had broken below its 200-day moving average by the fag end of 2022, and I think since then 600, 650 mark, the stock has been struggling. It was at a point around 440, 450 mark for Aarti Industries. So I think the stock has to do a lot more to get into a recovery. Not just a strong opening of single day could probably merit attention from traders, but I think a breakout of the 200-day moving average first, and then a consistency in price trend is something which we probably would be looking out for Aarti Industries. I think that level is closer to 500 mark for the stock, which means at least another 10-12% upside from current levels would be the first level of breakout for Aarti Industries. JK Cement, on the other hand, I think as the stock has been more range bound. I think in the last 1 week or so, the stock had come back towards its 200 moving average, if I'm not wrong. It's not a stock which has given great kind of a breakout. Even the last 6 months, 1 year of price trend, it's been more range bound. I think the larger cap names, the mid cap end of the cement stocks, they've managed to do pretty well for themselves. So maybe in terms of risk reward, the stock could be a good buy at current levels. Even if we expect the stock to get back into the higher end of the range breakout, we could expect 3,300, 3,400 as a moderate target for JK Cement.
Okay, so that's the take as far as these stocks are concerned. We have Rahul Shah also joining us on the show. Rahul, hi. Thank you so much for making time and speaking with us. You know, before I talk about the secondary market action, I want to talk to you about a couple of these IPO. Cello is going to list today and Hunasa's listing is also lined up for this week. What are your expectations?
Hi, good morning. I think we have seen the primary markets coming back, and I think few issues have done quite well. And I think there might be some moment gathering back into this thing as whenever we see the markets moving ahead, I think the primary markets is also synced with it. So I think we have to be very, very selective in terms of when you apply for it. Obviously, a couple of issues. I think Cello was one of the good issue, and we saw good amount of subscriptions in both in QIP as well as retail HNI section. And I feel that their stock should do well for a longer term perspective. That's one part of it. But Odasa again, I think was a good only for a subscription basis to get on a listing gains, not much for the near term. So I feel that I think if we get a decent listing, I think Hunasa one should look at exiting at this levels. And Cello, I think, looks like that could be a good structural story for next 2 to 3 years.
About Cello, I mean, in your understanding, because the business what they are in, it's a very competitive business.
So I think business will, as you rightly pointed out, they are into a competitive business, but the kind of growth what we see in terms of various businesses what they have, so looks like I think still some momentum and still some money to be made on this stock from the current valuations.
47 points higher for the Nifty. I guess that is the talking point as you walk into trade this morning. So Kunal, go back to small cap, go back to mid cap, or stay with Nifty, because that's where the action for next 2 days will be very exciting.
No, I think there are two parts to it, Nikunj. If you're looking at it as a portfolio perspective, definitely go with mid caps and small caps, because I think that's where the major part of the breakout and the trend is. On the Nifty 50, we are still seeing an index kind of a trend on the upside, but then if you're asking for the Nifty 50 stocks, I still don't see major stocks like Reliance, HDFC Bank, etc. showing any kind of a breakout as such. Yes, the stall or the fall into these stocks have stalled, but that doesn't mean that these stocks would get into a V-shaped recovery. We would need to see evidence of that happening for many of these large cap names. There are also not too many traces of major short covering into these large cap names. Yes, the short built up has stalled for these stocks. So, that additional confirmation is still pending from the larger cap names. On the Nifty 50, yes, I would be bullish. On the Bank Nifty, on the index, I would be bullish. And specifically in terms of portfolio, I think mid caps and small caps is where the action is.
Okay, mid and small caps is where the action is. So let's address some of those names. Lalpath Labs, which we were just flagging off a short while back, about a 6% uptick there. Apollo Hospitals ahead of its numbers this week, not a mid or a small cap. MCX, that's really been holding out very well. In fact, I just want to bring up the 1-year chart for MCX as well and show you how the stock has performed. Not just it's done well of late, but it's this year alone given you a 64% return. Of course, the large chunk of the gains have only come in the last 2 months or so. Kunal, is this going to be one of these stocks of the year, MCX?
Well, yeah, I think it's so far done pretty well for itself. I think the breakout in the last 2 months, specifically for MCX on the back of the news flow which was pending for the stock price, I think that's acted as a more of a catalyst for the stock to break past about 3 or 4 year swing resistance around the 1750, 1800 mark. That was a struggling point for MCX. And I think over the last many years, the stock tried to come closer to that breakout. There were intra-month, intraday breakouts for the stock price, but it didn't result into a major long-lasting trend for the stock. This seems to be now a very strong breakout for MCX. The volumes in the last 2 months, 3 months specifically for MCX has also been pretty much high. The delivery volumes have increased significantly higher. The trends have been a far more stable for MCX. So I would believe that the stock should see a more upside. But the only catch with this stock is its sudden high beta nature. So, all of a sudden you see the stock getting into a 10-15% kind of a correction. So it's always better to keep some powder dry and then wait out for that phase of correction to add more.
The mid-cap space is where you've actually seen, and I'm going to go back to Sony JP group of stocks, which is JP Associates and JP Power Ventures. For a trader, is there a trade there?
So if you look at JP Associate, trading around 18 odd levels, we feel that as long as it's holding above 16 positionally, I wouldn't recommend for short term. I think positionally 16 holds as a very key important level. So as long as it's holding above 16, it may give you a small bounce back up to 19 to 22 odd levels. So that would be a positional trade. I think that's where you can place your bets for a medium term sort of time frame when we talk about JP Associates.
Let's just, take stock of some of the best performing sectors so far this year. And auto and realty clearly are going to be topping the charts there. Let's see what the Nifty Auto and the Nifty Realty returns have been year to date. Nifty Auto has given you a return of about 27%, although it's fair to say that the rally in autos began from last year itself, or for that matter, even from the COVID lows. And the Nifty Realty is still outshining even what the autos have done. It's been a 49% move that the Nifty Realty index has seen, and I'm sure the individual constituents would have performed as well as what the index has done. But Rahul, where from here for the realty names?
So I think if you look at the commentary from the most of the management, which gave a very, very strong commentary, and I think way the things are going on, be it be Godrej, be it be Macrotech, be it be Prestige, or any other names, if I missed out, but all of them have a very strong commentary and one of the best quarter. So this is the same thing we used to talk about in the when we ended in the March quarter, when we saw that the numbers were quite strong and most of them gave a very, very strong. So I think this is reiterated. Q1 was good. Q2 also again was very good for most of the realities names, and I think still all these names will continue to do well. I think we have to look at into it where we see that obviously a stable environment in terms of the interest rates are there, and we see where the demand which is coming up in across the country. It's not only one sector where we see earlier used to be from a region or something, but I think what we are seeing is across. So I feel that all these stocks will continue to do well from here onwards. Also looks like still more money. Maybe if you have to stick to large caps names like Godrej, I feel that at least 20% money to be made from the Godrej or maybe in Macrotech also. All of them looks very strong. So our top picks remains Godrej and Macrotech in this entire sector.
In fact, you know what? Chris Wood had something to say about real estate sector. Remember, he flagged off his bullish call on real estate about 2 years back, I think. We've all seen how the returns have been in the realty sector for the last 2 years. But here's what he's saying about how the sector is likely to do from here onwards.
So I've got 4 property stocks in my Indian portfolio. We've entered our 3rd year of a property upturn. Now, last year when the RBI was raising rates, the property stocks did very well, I believe, in 2021, when people recognized that the property upturn was starting after, I remember, a 7-year downturn. Then we had RBI raising rates, so the property stocks corrected. But although the property stocks corrected last year, the actual property upturn continued. The property upturn was not impacted at all by the monetary tightening. And then in the last few months, as the markets become more hopeful that we've seen the last of RBI rate hikes, the property stocks have rallied again. And it remains the case that, Indian property sector or Indian property stocks are very small relative to the size of the economic opportunity. You had this very dramatic regulation or reform of the property market created by the Real Estate Regulation Act, RERA, which has caused a massive consolidation amongst developers. So the surviving developers are in a very strong position because so many of the
real estate has done rather well this year. Apart from DLF, what else should one look at if one wants to bet on the real estate boom? Rahul, question was for you.
Sorry, come again?
How should one bet on the real estate boom?
So I think, as I mentioned, I think a couple of stocks where we see that the numbers were strong and where we see that the commentary of the management is also strong. So obviously in the large cap space, I think which is reasonably in terms of risk versus reward is what we feel is Godrej Properties. So I think that remains our top bet in the entire sector. Secondly, I think macro type developers, again, very strong numbers which they came up with. So again, that could be also one of the reasons. And thirdly,
rates and the pre-open rates are indicating that we are in for a good start. I guess that is fundamentally very, very important for us to point out that where we were versus where we are right now, the market positioning, the global macros, the risk appetite, everything really seems to be changing. So Kunal, will it be Reliance, will it be HDFC Bank, will it be both now?
I think I'll still wait out for maybe a couple of days, Nikunj, because we've not seen any major traces of short covering into these stocks for us to try and call it as a major reversal for these names. As I said, that the fall has stalled for these names, but that generally doesn't indicate that you might see a V-shaped recovery. If I have to bet on either of the two, if you ask me in terms of the slight positivity in terms of charts, I think that would be Reliance Industries, the stock went into that oversold nature in terms of indicators when it went below 2,300 levels, and there is a slight higher degree of beta for Reliance Industries as compared to HDFC Bank. So that could be a pick from the two.
Right.
Let's look at the newsmakers, Zomato. Let's look at Indigo, State Bank of India. These three numbers are important. Zomato, of course, came during the market hour at 3 o'clock, so large part of the reaction may have got captured on Friday itself. But the upgrades are just phenomenal from Goldman Sachs to JP Morgan. Everyone who's tracked Zomato, I mean, they are now saying, okay, the turnaround in Blinkit is something which is extremely heartening. Then you've got SBI, where numbers are okay. The narrative is still that India is growing, SBI will benefit, but their NIMs are coming under pressure. CASA as percentage of the total asset, because there is a war of liability, that seems to be peaking out as well. So State Bank of India 580, 581, no large moves there. Titan, by the way, came out with good set of numbers also, and we'll be speaking to the management a little later. But those numbers again have beaten the street in terms of estimates. You may call it Diwali, you may call it Dussehra. Well, that space has done rather well for itself. In fact, if you look at jewelry has done rather well for itself. The listed jewelry stocks, whether it is Titan or the other, that's Ashok Sonthalia. He would be joining us at 9:40 a little later. But yeah, coming back to some of the jewelry stocks, I mean, all jewelry stocks from the recent low, whether it is Kalyan or Titan, in this year, look at the gain. Look at the gain in Kalyan. We don't talk about it. Senco Gold, 94%. It was an IPO which went public just in August. So Rahul, what is driving this sudden glitter in the jewelry stocks?
so I think when we see that the economy economy overall keeps on growing, I think where we see the the consumer discretion spending keeps on rising. So I think if we look at Titan's number and the commentary, what the management gave, one thing was very clear: all the business fronts they've been doing quite good, and obviously jewelry remains the top among the. So I feel that. One is obviously the festive season, which is going to drive it in a near term. Secondly, obviously the overall momentum in the entire as a sector has been quite good. So I think, and obviously the discretion spending, which we have seen in this space, has been quite good. So I think overall all these things are firing for all these jewelry stocks.
Great to have you on the show. We'll let you go on that note. Thanks as always for joining in, and wish you a very happy Diwali in case we don't see you this week.
Wish you the same.
Okay, let's move on. Let's get some mid-cap strategies going. Kunal, what is it that you're betting on?
So I bet on L&T Finance. I think that's a stock which has clearly shown signs of a breakout above 140 mark. It's a fresh 52-week high for L&T Finance above those levels. Looks extremely strong in terms of the setup. Targets of 152 for the stock and stop loss at 134.
What about you, Soni? What's your top mid-cap idea?
So my top mid-cap idea would be for Concor. Although on Friday we've seen long wilted positions of hardly 2%, but delivery volumes have been quite strong. So I think Concor technically is looking quite attractive from current levels with stop loss of 690 and targets of 750.
Point taken. Thank you so much for those mid-cap ideas. But let's get you the news fatafat as well. Shipping group Maersk is laying off thousands as weak demand and lower freight prices weigh on the revenues. The company in its Q3 results said that revenue had almost halved to $12 billion compared with the same period last year. Meantime, in the midst of the month-long Israel-Hamas conflict, efforts for a ceasefire appear to have yielded no progress. The Israeli military now claims to have divided the Gaza Strip into two parts. Meanwhile, US military has announced sending nuclear submarine to the Middle East stretches. Amid the turmoil, medical supplies were airdropped into Gaza by the Jordan Air Force, bypassing Israel's aid embargo. The situation in the region remains volatile with over 9,500 casualties so far. Heavy rains to continue in parts of Kerala as orange alert issued in 3 districts. The Indian Meteorological Department predicted heavy to very heavy rainfall over Kerala and Tamil Nadu till November 9th. The Weather Department has also issued orange alert for 3 districts of Kerala, while a yellow alert is issued for the rest of the state.
And what Delhiites are now breathing is toxic, poisonous and harmful air as the battle for clean air continues. The AQI in Delhi, Noida as well as Gurugram continues to be in severe category as it inches towards hazardous levels. With the situation not getting any better, Stage 4 of the GRAP has been implemented with immediate effect in the Delhi NCR region. The Delhi government has also shut primary schools till November 10th, while classes 6 to 12 have been given the option of holding classes online. Also, in a troubling development, Mumbai's air quality as well has taken a turn for the worse. The Bombay High Court has expressed deep concern over this deteriorating situation and took suo motu cognizance of bad air. The court will be hearing a plea today seeking urgent measures to address the issue, demanding strict directives for the state government and the civic body to combat air pollution and enhance greenery in public spaces.
Welcome back. Well, let's take a look at some of the stocks which are buzzing in pre-open, and JSW Infrastructure is one such stock which is reacting to its earnings. We have Mr. Arun Maheshwari, the Joint MD and CEO of JSW Infrastructure, to talk to us about just that. Hi, Mr. Maheshwari. Good morning. Thanks so much for making time. Your revenue growth this time around was quite solid, above 25%, but break it down for us. What was the pricing-led growth and what was the traffic or volume growth?
Okay, fine. The quarter has been very, very stable as what we have seen, because Q2 we have grown by 26% as compared to the previous year quarter. But if I had to look at quarter-on-quarter, there has been a bit of a dip in the volume because this is a seasonal quarter. This is a monsoon quarter in India. So it is already factored in. Always Q2 is the weakest quarter in a year. But that's why H1 is slightly lower than as compared to S2. But then in any which case, we have shown a 26% growth year-on-year basis. We have to look at the similar quarter of last year. And the revenue has grown by 29%, whereas the EBIT has grown by 33%. Because of higher volume, the total operation cost has gone down, the revenue has gone up, as well as the EBITDA as a result of that.
Right. Mr. Maheshwari, given the global disruptions with war, etc., how is it that you see traffic growth panning out in the second half?
Well, in our case, in our port company, we have a very unique combination of the cargo flow, wherein the general cargo disruption across the globe, wherein the interlinked supply chains are there, which is not really very impacting on us. We have experienced that during COVID times also, wherein the entire supply chain got disrupted across the globe, but our ports were running 100% and were doing volume after volumes. So in our case, we don't see that kind of disruption impacting anywhere, any which ways, especially if our customers, wherever they're sourcing from, that get usually disrupted. But whatever the disruption we have seen in the recent times is really not impacting us in any which case. As you spoke about H2, generally H2 is slightly better than H1 always. We have seen in the last several years because H1 consists of monsoons, as I said earlier. So H2 is supposed to be better than H1 as what we have experienced in the previous years.
So how is the mix between the group versus third-party cargo shaping up, and what is the target mix over next 12 to 18 months?
So see, our journey of third-party mix, as I said earlier in the same channel, that we have our journey started with the third party about 4-5 years back. For initial good 15 years of our company, we were doing only group company cargo. Now the journey which started with 6% in 2019 rested about 32% last year. The current H1, if I have to look at, it was 36% of the overall group cargo, wherein overall cargo, what we have handled. Especially when the cargoes are going up and up every quarter, maintaining this kind of percentage on overall volume is a good challenge to have. I think going forward, the way the group is growing, the way the group volumes are also increasing, maintaining a 40-60 ratio, 40 of the third party and 60 of the group cargo, or a 50-50, this kind of combination is likely to happen in another 5 to 7 years' time, if I have to look at.
Okay, Mr. Maheshwari, we'll let you go on that note. Thanks so much for making time. But there are a whole host of other stocks which are also reacting. Let's listen in to what are the stocks on Nikunj's radar.
With this interesting note where they're saying that Zomato should mature into a triple engine profit machine over FY24 to FY26. They're saying that the food delivery business has transformed to cash cow business. Blinkit is now turning profitable, making it the fastest growing Indian internet firm. And they're also saying that Zomato will be the most profitable global food tech company going forward. Now they're seeing the EBITDA to grow nearly 40% over FY24 to 26, and they've actually upgraded the target price by nearly 50%. From 100, they have increased the target price to now 150. Similarly, Goldman Sachs has also increased the target price by around 30 odd rupees. Earlier it was 100 to 130. So overall, all brokerages have remained positive. So we can see some kind of an up move when it comes to Zomato, right?
See, guys, I mean, this in my book would be a classic case of disbelief and then a classic case of turnaround. Beginning of the year, everyone thought that, okay, this is one company or this is one sector which will just not turn around. And it's a turnaround which is remarkable. Food delivery business had shown signs of turnaround 2 quarters ago, but what is important here is the grocery business, which is a thin margin and it's a thin margin business. They managed to turn it around. Now, for me, the minute you say Zomato, well, the first impression is food delivery. But I think it's the Blinkit business which really needs to be, bought out, at least for the quarter gone by, because the total addressable market, which is called as TAM, the total addressable market for the grocery business is 10 times more than the food business. If they are able to really scale it up in that category, I think we could be looking at potentially a very different kind of a, very different kind of a setup for Zomato. The challenge is that for Zomato now everyone is on the same side of the boat. At the beginning of the year, everybody was bearish. Now everyone is bullish. Zomato's market cap is now almost 1 lakh crore. Post 2 quarters, a lot of...
Okay, 116 now on Zomato, and that's been a near 100% move that the stock has seen year to date. But let's get in some more mid-cap ideas. We've been talking about how the street is betting big on the mid-cap end of the market. But here's the Nifty call this morning. A buy consensus from both Sony as well as Kunal. So the Moodometer pretty much on a consensus buy on the index. The Nifty Bank as well, a consensus here too. Both Kunal as well as Sony are recommending buying into the index.
Well, short covering on Friday. Are we in for a long bias today? Nifty is now at the highest point, at least in this series, and we are above key levels. in terms of resistance. More importantly, the global setup I think is very, very favorable. It is favorable largely because of what is happening to the 10-year paper, how crude prices have retreated, and the positioning of risk which was coming under threat mid-October, late October, that seems to be reversing completely. So are we in for a last hurrah? Looks like we are in for one. Whether we do it in November or December or maybe in next couple of days, that's very hard to establish. But I guess there is definitely a change in terms of the momentum of the market and in terms of the basic approach what traders have adopted. Now SBI is expected to open lower because of poor set of numbers, but Zomato and Indigo will actually see a result reaction. So first rates will just start kicking in on your screen now. Let me just use my screen for reference to establish any more names here, and there you go. So the first rates are, it's uptick of 0.5% for the Sensex, uptick of 0.5% for the Nifty. The Bank Nifty also seems to be charting along very, very smartly. Now in terms of the real movers, Zomato, Indigo, State Bank of India, and look at the surge in Zomato. This is absolutely stunning, isn't it? Indigo 25, 24 like a minor response, and State Bank of India just about here, just about there. Stocks which are falling today, you got AU Small Finance Bank which has fallen. You've got, by the way, you've got Aarti Industries which has suddenly come up on my screen, 15% higher. Delta Corp 2% higher. Z Entertainment 3% higher. Vodafone is falling. BOB is falling. And then you've got Vedanta which is falling, largely because of how things are in terms of their corporate structure and things are moving. But the top draw this morning, I think, is once again Zomato.
Gaining ground even after that uptick on Friday. But Vedanta, the numbers actually were decent on a sequential basis. Revenue uptick of 6.5%. The adjusted margin as well has seen a 1% jump up. Interglobe Aviation, let's see what that stock is up to. Considering the numbers are above estimates, the guidance of 2% capacity uptick on a sequential basis is also something that they've highlighted. There's JK Cement, the sales volumes have seen an uptick of 22%. Aarti Industries, Crompton, JSW Infra, we were just chatting with the management too. Thermax, they've all delivered good set of numbers. In the meantime, let's also flag off what's not delivered well, and just going to highlight some of the stocks wherein you've seen some earnings disappointments coming in. So let's see what BOB is up to, because their names are at a 5-quarter low. The NIM guidance as well has been cut, and you're seeing a cut of 3.5% on BOB. Havells, the revenue, there has been an intelligence inspection which has been conducted at their offices. Bharat Forge, North America Class 8 truck orders have seen a slip of 10% on a month-on-month basis. Delivery as well, the net loss has only expanded for them. Gati as well. EBITDA is downtick of about almost 26%. PB Fintech, this is the one that I want to definitely flag off, because there was a net loss which was expanded. The EBITDA has contracted, but you're seeing a jump of 2.6% on the stock coming in this morning. Eicher Motors, they've opened a 90-day positive catalyst watch on Eicher Motors, one of the brokerages, and then of course there's CG Consumer, wherein also the PAT is seen a downtick of 23% on a year-on-year basis. So these are a bunch of stocks to look out for.